Welcome to today's explainer. Let's be real, if you're gearing up for the Cambridge 9706 exam, you already know the stakes are incredibly high. Today, we're dissecting an absolutely critical part of the syllabus, International Accounting Standard 37. That's Provisions and Contingent Liabilities. Now, this is a high-stakes area that shows up in literally every single examination series. So in this explainer, we are going to go through an insider's guide to not just surviving this tricky topic, but actively using it to secure those top-tier marking bands. Okay, let's dive into this. I want you to look at this stark warning straight from the Cambridge Principal Examiner reports. They state, candidates consistently confuse key terminology. Now, this is a massive red flag, right? Before any complex calculations are even attempted, students are bleeding marks simply because they mix up a provision with a contingent liability, or they completely misapply the recognition criteria. Our ultimate goal today is to make absolutely sure you never, ever fall into this trap. To get you operating at that elite level, we're going to build our strategy across 4 distinct pillars: core concepts, technical methodology, examiner traps, and top mark strategies. Pillar 1, core concepts. Before we even think about punching numbers into a calculator, we absolutely must establish the theoretical architecture of IAS 37. It's like building a house. You need a solid foundation first. As a quick refresher, a provision is essentially a liability of uncertain timing or amount. A contingent liability, on the other hand, is merely a possible obligation. It completely depends on future events happening or not happening. Understanding these precise definitions is where everything starts. But remember, this framework doesn't exist in a vacuum. It rests on those definitions, establishing clear causal relationships, and, here's the real secret, integration with other syllabus areas. Examiners explicitly note that candidates who reference cross-topic connections achieve significantly higher marks. You have to be able to explain how recognizing a provision directly impacts profit, equity, and the true and fair view of the financial statements. This brings us to a really critical contrast: superficial breadth versus analytical depth. Imagine 2 students taking this exam. An average student relies on superficial breadth. They memorize a rigid list of rules and just lightly sprinkle them across their answer, hoping anything sticks. But the assessment framework prioritizes analytical depth. A top-scoring candidate uses logical, structured, and evidence-based reasoning. They dig deep into the specific scenario, applying the precise recognition criteria of IAS 37 to the exact facts provided in the prompt. They don't just state what happens, they explain exactly why it happens. Pillar 2, technical methodology. All right, with our theory locked in, we're transitioning to practice. I want to enthusiastically introduce you to one of the absolute most powerful concepts in accounting exams, the method mark strategy. What you need to realize is that marks are actually awarded for systematic processing. This means you get points for your methodology, the physical execution of your answer, even if your final calculation goes slightly off track. If you show a logical, step-by-step approach to an IAS 37 problem, you scoop up highly valuable method marks all along the way. Let's move to and see how this builds into a practical workflow. Here is the exact 5-step standardized sequence required to secure those critical marks. Step 1. Identify the key elements. You have to ask, is it a present obligation from a past event? Step 2. Apply the relevant IAS 37 principles. Step 3. Execute your analysis with crystal clear workings. Step 4. Verify your results. And Step 5. Present your final answer in the appropriate format. If you consistently follow this exact sequence, your answers are going to become completely bulletproof. Now, Step 5 is where so many candidates stumble. Presentation in accounting isn't just about making things look pretty on the page. It's a strict academic convention. Without proper headings, correct terminology, appropriate formats, and incredibly clear annotations, you are literally leaving guaranteed marks on the table. Do not throw away easy points just because you forgot to label your working. Real quick, right before we tackle the hardest part of the exam, the examiner traps, I want to pause for a second. If you want to consistently unlock these Cambridge breakthroughs, make sure to subscribe to Ace the Exam's IGCSE O&A levels. That's at AceTheExam_IJCSE. Hit that subscribe button and enable all notifications so you never miss a weekly strategy session. All right, let's get back to it. Pillar 3, examiner traps. So you know the theory and you know the method, but you really need to know where the landmines are hidden. Trap number 1 is the absolute most common pitfall, applying the wrong approach for the wrong context. Examiners love, and I mean love, to throw unfamiliar scenarios at you, like some bizarre legal dispute you've never seen before. When students panic, they default to a pre-memorized approach that just doesn't fit the facts. You absolutely must adapt the core principles to the specific context given in the prompt. Trap number 2 is just a tragedy of unforced errors, simply forgetting to check your format and presentation. After spending 10 grueling minutes sweating over a complex calculation for a contingent liability, students often just scrawl a final number at the bottom of the page and move on to the next question. By doing so, they completely ignore the strict conventions we just discussed, effectively throwing away the easy method marks we literally just covered. Always, always double-check your formatting. And trap number 3, providing generic answers. Listen, if an examiner asks you to evaluate a provision for a specific manufacturing company facing a massive product recall, they do not want a textbook definition of IAS 37 copy-pasted onto the page. They want an answer tailored precisely to that manufacturer using the data and the narrative provided in the exam prompt. Remember, generic answers get generic, low-tier marks. Pillar 4, top mark strategies. So the crucial point is, how do we elevate a good answer into a flawless, top-tier professional response? It's all about critical analysis. This is what separates an A grade from the rest of the pack. Top-scoring candidates actively question the assumptions given in the prompt. They consider completely different perspectives, like analyzing the impact on shareholders versus the impact on creditors. They justify their decisions with hard evidence, they identify data limitations, and they evaluate alternative interpretations. This is what professional evaluative thinking actually looks like. To ensure your critical analysis lands perfectly, here is your ultimate memory hack and examiner alert. You might want to write this down. Always define terms before using them in extended responses. Never casually drop a phrase like contingent liability or constructive obligation into your analysis without first locking in its precise definition for the examiner. Doing this proves your technical mastery right out of the gate and frames your entire argument with undeniable authority. As we wrap up this masterclass on IAS 37, I want to leave you with a provocative question to guide your future study sessions. Look at your own notes tonight and ask yourself, are you just memorizing rules, or are you actively evaluating assumptions? The Cambridge 9706 exam doesn't just test your memory, it tests your capability as a professional accountant to systematically analyze and evaluate complex information. You need to shift your mindset from rote memorization to true evidence-based reasoning. Thank you so much for joining me for this explainer. Remember, crushing these exams requires consistent strategy, so hit that subscribe button for AC Exams IGCSE O and A levels, turn on the notification bell for future exam hacks, and leave a comment below with your target grade. Keep practicing, keep evaluating, and keep aiming for those top marks.